There you go. So there, now you can hear the volume. So sorry about that. All I was saying in here was that everything today is about either things going to their strike price like IBM or Apple or Microsoft, or the Nvidias of the world. Is it going to reclaim that resistance zone? The biggest mistake, well, there are a lot of mistakes I see from traders, and one of them is thinking resistance is an exact number. Now, this is really blowing through a lot of numbers. So there's your resistance zone. So last time, a couple of days ago, it stopped like a dime right at that top, right here, right in this zone. So now it's gotten over it. Well, theoretically, that's good for the NASDAQ. That's the good news. Definitely, that's the good news. What's the bad news in here? The only real bad news, like I said, that's good for the NASDAQ. No doubt about it. So things brushing off things, sort of. But I want to show you warning signs. There's good and bad news. Number one, you see what's going on in Microsoft. If Microsoft doesn't hold there, you're talking about here. Now that's a big if. Yeah, maybe it breaks up. I was just playing that if it was 411 playing to 410 and getting out of the way. So just keep that in mind. Tesla had good news, while NIO had good news about China maybe encouraging EV sales. So that's one reason that Tesla went up. So we backed away Tesla. We broke even today in Tesla. Thank goodness. So we broke even in Tesla, and that's just the way it is. You just don't go back. So what else are we going to do today? Well, number one, I thought I'd show you the chart levels, and I thought I'd show you overbought and oversold and a number of other things. So let's just go over that. Give me 1 second. So what I'm watching in here is this. So I'm watching overbought and oversold. I use the MACD a lot. So if you're in the essentials room, you know I use the MACD a lot. So just keep that in mind. So all I'm doing in here is I'm watching the MACD overbought, but it can stay overbought. I'm watching that rally up to the 50 moving average. But where's the real layup area? Well, let me show you. The real layup area, now I'm looking at other stuff in like Tesla, and I haven't done it yet, just to let you know. But the real layup area on these is when they get up to, let's say, moving average resistance. And I'll take, instead of the 20, I'll use the 50. Moving average resistance and price resistance, and get overbought. So one of the bigger mistakes I see is not waiting for that reversal candle if you get to those resistance areas. Now, that could be a big if. Now, like I said, I'm not thrilled about missing. Let me put it back up here. I'm not thrilled about missing Microsoft. Yeah, to me, Microsoft, I'm not short at 509 because now it can go to 510. So just keep that in mind, and keep in mind in the chart patterns mastery, we broke even in Tesla, thank goodness, and we're out of it. But getting back to it about the ES, you're looking at the overbought MACD. You're looking at it attempting to go to this resistance. All that is moving average resistance, not price resistance. Price resistance is higher. Price resistance is up here. I'll put it on, yeah, you can see it there. So the breakdown points become resistance, that area. So on the one side, you have the moving average resistance, which isn't as big a deal as price resistance. But if I see up here, even now, if I start to see a reversal candle like this, followed by some kind of bear flag, darn right, I'll play it to the downside. At the moment, I don't see anything one way or the other. Are there danger signs? Absolutely. The bonds are still not doing much. Not doing much. But right now, I think everybody's keen off Nvidia trying to break back up and invalidating this top. That's what it looks like to me. So that's a big deal in here. I know Google's way up. I don't really use Google as much of a tell. I haven't seen it work. It's that I'm watching. I just can't stress enough right in there. And if you see what I see, yeah, it could get to 51.50, no doubt about it. Then I'll look for the reversal patterns. So what's a reversal pattern look like? Reversal pattern looks like that. Now, you might say that's hindsight. So I thought I'd go back to that day and show you what we're talking about. So right in here. So we're going to take that day. So that is April 15th. And I just want to show you so you sort of get a perspective. So we're going to take April 15th. And so the hourly, you see the consolidation right here. You see that consolidation. But could you have timed that one? As all this did was get up to resistance. You'll see. So you got up to some resistance, but you still didn't know if it was going all the way to here. So let's go see on that day if there was a way. Go into the rewind function on Thinkorswim. So we're going to go right here. We're going to go to April 15th. So let's look. So we're going to go to April 15th. And you're going to try to find what the markets are keen off of. That's what we're always doing, finding what the markets are keen off of. So we're going to go to April 15th. There, and you see it's already turning. Yeah, that's all hindsight for you. But we're going to go up to here, right there, right there. So that would be at 10 in the morning, right there, 10 in the morning. So was there something? Well, number one, the markets already had started selling off. So that's number one. Number two in here is this. So what we're watching in here, and when it delays like that, I worry about the screens dying. So let me do this. Let me log off that part. There. So what I'm doing in here is looking at this. So we're going and we're seeing, why did the market stop where they stopped? Was it a government report? No. Wasn't anything like that. Was it the bond market? So all we're doing over here is I'm going to take, let's say, a 15-minute chart, and you're going to see it getting blasted. So it's getting blasted right here, 9:30. So why did it get blasted? Well, on the left, let's put the bond market. Did the bond market go down? So yeah, it sure did. So and the bond markets continued down. Look at that. So this had a negative divergence. That was going up while that was getting nailed. So you might not have gotten the beginning of this, but then you got that consolidation right at this support zone. So if you're wondering, this is an inverse head and shoulders. If that breaks, it could go up by that amount, which is what it did. So when it went down, it stopped at that level. Then it paused for a minute. So then it just bounced back to the zero line, the MACD. But the key is the bond market went down so much that the ES had to listen. So if you go into a 1-minute chart in here, there, that's what you're going to notice in here. Not up here. You might have missed that. It's that consolidation right at the air hole. Now, that was a good one. So just to let you know, that was a good one in there, that you had this trend line. You might have missed that, but you get the next one, the consolidation. And what was making the markets go down? Probably the bond market. So just keep that in mind, and I think that works pretty darn well. So it works pretty well. Now, what do you do now with the markets? Well, now you got to watch that Nvidia. And the higher the Nvidia goes, the less likely any bearish pattern is going to work. So you have the bond market sell off on the left. You might be like, oh, the NASDAQ's going to get nailed. Not if the things that made it go down in the first place are invalidating their bearish structure. You see what I see. Now, don't get me wrong. That had also gone down early in the on Monday. So with this getting back to this area, if you're trying to bet on the NASDAQ going down, you better see the leaders start to go down, just like yesterday. Like yesterday, Nvidia was going up while the NASDAQ was getting nailed. This is why we were long the QQQ. So I'll show you what we're talking about. And Mitch, if you were on the Chart Patterns Mastery, you'd see that we've been long wheat now. That was our biggest swing trade. Biggest swing trade. We've been long wheat now for about a month. So good move for us. And I think it could go even higher. It's getting a little overbought, but that's our biggest swing trade right now. And it's working. So when it comes to the overall market, historically, May is pretty weak. But right now, if Nvidia is overshooting the resistance, then why shouldn't the markets? So that's why the ES and everything isn't going down a lot. So, just keep that in mind. That's the way I look at it, at least. So that's the way I look at it, which means I don't have to do a thing in here. I don't have to trade every second. Are the bonds diverging? Yeah. But on the other hand, you have the thing that made it go down last week going up. Yeah, Nvidia getting nailed. The whole market got nailed. So now you're seeing Nvidia try to reclaim everything all the way up here. And yesterday it went up. So I just want to show you with the NASDAQ here. So let me show you what we're talking about. So in here, this is yesterday, and we could take QQQ because Nvidia on the left is non-24 hour the way I'm showing it. So forget about Friday. We're talking about on Thursday. So we're talking about Thursday. The market's got nailed because of Meta's earnings. Just keep that in mind. That doesn't mean to blindly buy it on the way down. But when you saw Nvidia on the left, going straight up, that made it more likely that this was going up. So the Nvidia formed this. We call this a Stewie pattern, where it's the inverse head and shoulders, and we highlight it. Well, maybe it looks like Stewie from Family Guy. Maybe. Or some creepy thing. So just keep that in mind what we're watching. So inverse head and shoulders in there. And once you saw this get above here, it doesn't mean to buy the Qs. It means then to look for a bullish pattern within the Qs, or a bullish pattern is more likely to work, which is what happened. So we were along the Qs. Now, let me show you another thing. So you see that in Nvidia on the left. We're going to make this nice and big, or I'll go and take trading view. And I'll show you what we're talking about. This is yesterday. One of my favorite patterns is a bull flag within a bullish pattern. So here you go. So you had the Qs going down, but you had Nvidia going up. You had this possible bullish flag here. But one of my favorite patterns is a bull flag after a rectangle. There. So why did it form a bull flag? Because it's stuck at resistance. So when it broke that bull flag, it broke it broke the big rectangle. And that worked. So we got out in here. I mean, don't get me wrong, we're not perfect. We got out here, took our 25%, we're out. I didn't go back in, and I didn't go back in because I was worried about Microsoft. So just want to let you know that's how we did that. Now, where else do we go? Well, longer term, if Nvidia can stay up, which right now it's acting okay. It has earnings coming up. But if Nvidia can blow through this, now I'm not sure it will, but if it can continue up, then it comes down to, are the bond market going to go down enough like it did on Monday that pulled down the whole market? Or is this bond market going to rally and then the NASDAQ goes nuts? So the Fed is next week, like on Wednesday. If this bonds go to here, then I think it's less probable that the NASDAQ will blow through that 50 or the resistance. Just keep in mind, we've had this resistance zone right here for I don't know how long, a week? Yeah, a week. So that's the area of resistance that I'm looking at a couple of things. Number one, how Nvidia acts when this gets up to there. Number two, are we going to see a reversal candle if that happens? That's going to be my favorite thing in here, which means at the moment you don't have to do a darn thing. You're sort of in purgatory. The MACD is getting overbought. I'll show you with Thinkorswim. But MACDs can stay overbought. There. And I'm just telling you, you're getting near resistance, no doubt. All those prior breakdown right there. It's getting there. It's only about 15 points away. This is overbought, no doubt. And the NASDAQ on the left, yeah, it'll do the same thing. So it really comes down to, you need that to stop going up. Now, what do you notice? Yeah, it's a little rough in here, but if you notice, the NASDAQ is almost on the highs. I mean, I'm taking a 1 minute chart. There you go. NASDAQ testing up here. On the other hand, Nvidia is all the way down here. So now you get this better go up on the left, or the NASDAQ's probably going down. That's the kind of negative divergence you have to see for the markets to go down. Just keep that in mind. Now, Apple, I'm a little pissed off. I didn't short it earlier, betting on it going to 170. But Apple could be just like Tesla, that they've pounded it into earnings, so the bar is so low. So keep that in mind. And also, I won't be on, but do not write off Tesla going back to the strike price. The biggest open interest in Tesla is 170. Now, I know it looks great. Everybody can, do the hindsight. But that's where the big open interest is. Right there. Anybody that says, one side is matters, I was on the floor a long time. It's both sides matter, because it's spread traders that'll have it revert to the strike price. So when I was on the floor, let's say I'm trading Tesla and I'm long the 170 puts, long the stock, short the calls. It's called a conversion. Well, if it starts getting near 170, I got to start unwinding this. I have to sell stock. I have to sell the puts. I got to buy the calls. And that's why it reverts to the open interest if there are a lot of spread traders at those prices. So just keep that in mind. That's what I'm watching in here. As you see, it's trying to revert to the strike price. So, definitely keep that in mind. And really, in the grand scheme of things, Tesla didn't act the best today. So now you might say, well, NIO came out with good earnings about China. Not good earnings, good news that China's going to try to encourage EV sales. Just keep in mind that came out on the opening and Tesla went straight down on the opening. So I'm not sure how much it's going to matter. I think open interest is going to matter. So just keep that in mind. A conversion. So just to let you know, you can do it with stocks that are hard to borrow as well, like DJT. So when I'm on the floor, let's say somebody comes and wants to buy a lot of calls. So they buy a ton of the 170 calls. Well, to hedge it, I'm going to be shorting stock. So the problem is, so I'm short calls and short stock. But what happens if it goes to 160? Yeah, then I'm buying stock. So I'm buying stock against my short calls. So I'm shorting calls, buying stock. The problem with that, is if you're long stock and short calls, you're short puts. Because if that goes to 160, you're losing 10 points on the stock. You're making $1 on the calls. So you got to buy the puts too. So back then, you couldn't short on a downtick. And a lot of times in IBM, you would get where the quote was one. Well, I can't get it to work. But the quote was, let me see if I can get it to work now. Yeah, you get where the bid was 1, the offer was $9.99. You couldn't short because you couldn't short on a downtick. So you needed a long stock. So you were always short calls, long puts, long stock. It's just a way to lock into a riskless position when you're on the floor. But the point is, the closer it gets to 170, I got to unwind this. So it's just called a conversion. Now, that being said, there are some stocks that are impossible to borrow. So we did this in GME 2 years ago. In GameStop, not now. I'm talking about when it was, going nutso. So what we do is we'd buy puts, buy stock, short calls. So we had the long stock to sell. So that's how we did it. Now, like I said, when you're on the floor, like now, you can short on a downtick. Everybody was worried that we'd have a crash in the market because you could short on a downtick. The only smart person with this was Warren Buffett, who said the more they short, the more supports for the market, not crashes. He was right. So it just gives you a potential of support. But the key in there is back then, if they showed 1 by 9.99, because that's the most they could show, so there was 100,000 at least to sell, you couldn't hit the bid if you hadn't had a position, to go short, because guess what? You couldn't short on a downtick. So you might be like, heck, I'll just go and buy puts. Well, you really think that us on the floor are going to sell you puts? No, we're going to widen the puts. We're going to widen them like crazy. So if right now on the floor you saw 1 by 9.99 in IBM, I'm telling you, those 170 puts wouldn't have a 16-cent market. They'd have a 40-cent market. So the edge wouldn't have been with you. So that's why you couldn't pay the offer. So just to let you know, that's one way it worked. Now, if they're in the money that much, so they're $2, I'm not talking about today. I'm talking about, let's say on a Monday. Sure, you could go and sell out of the money calls instead. But the problem is that on a Monday, or right now you can because the calls are too cheap. But yeah, a lot of times we'd sell out of the money calls. So we'd do that if we couldn't short stock. So just to let you know, that's one way to do it. So in there, it's just one way to do it. Now, getting back to it about everything else with the markets, I just wanted to show you what a conversion is and why the more evenly dispersed open interest, the more likely it is to go to that strike. Doesn't mean it has to. Let's put it this way. If Tesla has a bear flag right now, it's much more likely to work because it could get sucked to 170, barring news. Yeah, they had pretty good news. NEO did. But still, that's what I wanted to show you, that one, you need the markets to, stop going up. And number two, you need really this to have a bear flag. So does Tesla have a bear flag short term? Well, yeah. The problem with that is it's a bear flag against all that support. You want a bear flag with nothing underneath. So, and NEO going to a new high. You got a lot against you about betting on Tesla going short, even though it should go down to here, because this came out before the opening. Tesla on the opening got nailed 3 points. So you'd think this news doesn't mean anything. But with the NASDAQ up and Nvidia up and NEO up, it's going to be real hard for a bear flag to work. Now, maybe these conditions change later, but not now. So, and like I said, it's amazing on how this works. Remember the NASDAQ was up 300? Nvidia stopped going up. So, what did the NASDAQ do? It stopped going up. So, it's keen off of Nvidia. There's no doubt in my mind that the NASDAQ, is keen off the Nvidias of the world. If Nvidia fails in this zone, then the NASDAQ, I doubt, goes to a new high. The problem is, theoretically, this is all, probability. So this would have to go to here, like down another 5 points. For me to do a swing short, you see what's going on with the NASDAQ on the right. Now, when I got on, I talked about Nvidia was already going to a lower high, and sure enough, the NASDAQ went down 35 points. So you see, it's just running out of gas, the Nvidias of the world. So for me to get wildly bearish, though, I need two things, really three things on a longer term chart. Number one, I need this to get really to that 18,000. Or see a reversal candle on a short-term chart. Let's say a 15-minute chart. You don't see that yet whatsoever. So we were showing that Nvidia earlier upside down. And we were showing that Nvidia, if this was the market upside like that, this is Nvidia upside down, I'd be all over pounding the crap out of the overall market. It's not that. I mean, it's just not doing that. So if I see that, great. And I'll play in, if that was Nvidia on the downside. Now, on the other hand, Nvidia is starting to crap out without even looking. I bet the NASDAQ's crapping out. Yeah. They are keen off Nvidia. So just keep that in mind. Now, the big deal is if Nvidia totally fails this area right here. That's what I was telling you. It's a zone. Now, if it got under 840, really about 844, that's 17 points, I would be doing a swing short into the NASDAQ. At the moment, I don't have that. So just want to show you that. And I'm telling you, I know a second ago, Tesla was just up a point after I talked about it. I just can't stress enough that if Nvidia goes down, which is pulling the NASDAQ down, then it's more likely that Tesla's bear flag is going to work and that it's going to get sucked to the 170 level. It's amazing on how that works. So now I didn't do Microsoft. Did it break that rectangle? No. Now, why didn't it break this rectangle? Because of the strike price at 410. That's why this morning I was saying, we want to. It doesn't mean to blindly short at 412. What it means is to look for reversal patterns above the market. So this one was tough because you had that support. It's this one. So a lot on the chart patterns mastery short versus that. So, just keep that in mind. Short versus that. So, just keep that in mind. And, on there. So that's what I'm looking at in here is short versus that, then a little reversal candle. So, but why didn't I want to play that? Because of the strike price at 410. So just keep that in mind. And by the way, in reference to whatever you're talking about, I don't have a brother-in-law. So just to let you know. So getting back to it in here, you see what's going on in Nvidia. It didn't hold. So why didn't it hold? Was it because it's overbought? Did the bonds go down? Well, heck yeah, the bonds went down. Like I said, the markets are extremely interest rate sensitive right now. Extremely interest rate sensitive. So the one is they're sensitive to the big NASDAQ stocks. So if this doesn't hold right there, if that doesn't hold, and if the bond market doesn't hold in this zone, right in there, right, if the bond market doesn't hold that, and this doesn't hold that, then you could see the NASDAQ up less than 200. I'm not saying right now, I'm just telling you on how I'm looking at it longer term. I mean, well, let's say longer term, 1 hour. So you're going to see it's pretty fascinating to watch. There. Look at that. Look what's going on here. I mean, I don't know about you. Number one, when I jumped on, I told you the NASDAQ was too high relative to Nvidia and the bond market. So right now, what am I watching? I'm watching a number of things. Number one is the bond market. Number two is the Dow Jones Commodity Index versus the bond market. A lot of you know I obsess about that. So the higher this bounces, the lower the bond market's theoretically going to go, because long bonds don't like inflation. And also, the higher the commodity indexes go, the more likely the Fed is finally going to look. I mean, let me just ask you in the essentials and YouTube, how long have I mentioned about the Dow Jones Commodity Index going bonkers and that the Fed was going to change their mind about rate cuts? How long have I been talking about that? 2 months? And now they're talking about, yeah, maybe we shouldn't have rate cuts. So now there's a big difference between being right and making money. You got to combine it with other things, but that's worked for a long time. That's worked for a long time. And like I said, Tesla, there goes your open interest, Mitch. Now, yeah, now you see a 1 minute. Now, let me just tell you, when we're playing that open interest kind of play, and this is why I was pissed off earlier about Microsoft. If you're going to play something to go to the open interest, you better have some cross of something, because you don't know how high it's going to go, like you saw over here. If you shorted Tesla too early, which we did, but we covered and broke even. Look at the difference in structure now versus earlier. So now that the bonds are only up 15 and Nvidia is selling off, the probability of Tesla going back to 170 increases dramatically. So just, keep that in mind. Definitely bonds, Nvidia, open interest. So pretty cool. But that's, how we try to do it. Now, the next thing to watch in here, because I'm watching a lot of things. Number one is correlations. So let me show you what we're talking about correlations. And I'm telling you, I don't know about Tesla going down to 167 when the Nasdaq just sold off 40 and Microsoft went up or not and not down because of that open interest. So a lot of times when these big old suckers have earnings, you get a big accumulation of open interest. The problem with Microsoft, it's not that big considering the earnings. 1,900 for a stock that's traded 16 million, not enough. How about Meta? That's pretty pathetic also. Maybe 440. Yeah, I went to 440. So how about Apple? Doesn't have earnings. And I'm telling you right now, you mentioned Apple earlier. Here's another one I banged the table about. What am I talking about? I'm talking about that. You were asking about this. There you go. I mean, you can't be more clear about where to short it. The problem with this on both of these is that wasn't that big a move. It's a pain in the rump. So what I mean by that is Apple's going to be a lot better short on right here. And then a reversal pattern. Here, all bets are off because it's all at 42 cents. So I'm not doing anything in there. So not doing anything, but I will tell you, it's fascinating to see Microsoft going to the 410, Tesla going to the 170, just even though they shouldn't. You would think Tesla had good news. So Mitch, isn't that amazing? So a lot of times when you trade these crazy stocks on earnings, and Tesla trades a lot also, you can use a tick chart. And if you're wondering what that means, you're taking every tick, 133 periods. I can't believe it's 170. Aren't you fascinated? It's 170. So, I mean, the NASDAQ's rallied and the stock got sucked right to the strike price. But I wanted to show you, if you're wondering if you should use a tick chart intraday, watch the number of ticks. I'm doing the counter. So every time it does 133 trades, it forms a bar. That's why when something has earnings, that works great. So let's take Microsoft. You're going to see some of these. Let's take a Broadcom. You'll see it has dots and dashes. Look at that. It's only had that many 133 tick bars. That's a joke. But how about Microsoft? It's had a ton. And the more bars, the more recognizable patterns. So there's one there. Yeah, I missed that one. Just telling you, these things work. And I will tell you something else. If Microsoft decisively breaks, I'm not saying it will, but if it decisively breaks this, even though it has open interest at 410, I think that's bearish for the NASDAQ. The only caveat, it doesn't have that much open interest. The one that has the most is Tesla. So just keep that in mind. So Tesla is all about low bar. So I'm not talking about Elon Musk ponying up to any bar. I'm talking about the low bar. I know you knew what I meant. Number one, it's overbought. Number two, it rallied finally into a lot of schmutz, a lot of resistance. But what's happening is these stocks that have a really low bar go up. So that's one way. Keep in mind, Meta had a really high bar and got nailed. And I'll show you another thing that I think is going to be a tell for next week. So that's my golden outside. That you haven't heard my beagle bark yet. That's always a piece of work. She's in here, but with me. So this is what I want to show you. Number one is about this had a high bar for earnings and got nailed. Tesla had a low bar. And now you wonder about Apple. I'm not talking about today with a strike price. I'm talking about Apple with how far it's gone down relative to the rest of the groups. Now you might say, well, Microsoft had a high bar. Well, it's not necessarily. It's sold off into earnings. Meta closed near its high before earnings. So, I mean, I don't want to overanalyze it, but I'm just saying that's what I'm watching right now, is that things that had a real high bar are getting hit. So that's the way I look at it. And that's all I'm watching right now, other than this. Number one, the bond market. But I want to show you something else that's a little trader trick, and it worked. So let me show you what we're talking about. So 2 days ago, I'm talking about 2 days ago, we're watching the transports. This was on our nightly charts and also all the videos I'm doing. So what we were saying in here is the Dow Jones transports are down for the year. They've gotten nailed, as you see. So the old Dow theory, you're like, well, if that's down for the year, why isn't the S&P? Well, they can go their own merry way to a point. to a point. But when you take the SPX on the right, so there's the transports, the SPX on the right. So the SPX is up a ton this year. But what's the difference? The difference is there's also a big divergence in the bond market. Look at that. Now, why were we somewhat bullish a couple of days ago? Because finally the bond market had some sort of stabilization in here. So this had us wick down because of geopolitical stuff, and that started going up. So that's why we are relatively bullish or looking for bullish patterns in the S&P. Now you have this at a new low. You have that up near resistance and overbought. Doesn't mean you're going down yet, but these are, if those transports on the left stay down, then I would look for reversal patterns in the ES up at these areas. I mean, that's how I'm looking at it. So that's what I'm looking at. So right now, another thing, and this is a cool trader trick. So I'm just saying, with bonds diverging and with the transports diverging, how on earth is, let's say, the NASDAQ going to go down? I'm not talking about today. The only way it's going to go down, on Wednesday, when the transports on the left were getting destroyed. See that spike? The only way for this on the right to catch up was going to be if Meta's earnings were bad, which is what happened. So now, on the other hand, you had the transports yesterday really rally all the way up here. So that meant to me that all bets were off on playing something to the downside like a Microsoft. You didn't have to play it on the upside, but you sure didn't have to play it on the downside. So, when you see that, now conditions are changing again. You have the bonds, really underperforming, and you have the transports here. I think if you see the transport average testing the lows from a couple of days ago, Wednesday, then I think you're going to see something happen in the NASDAQ to make the NASDAQ catch up. At the moment, everything's a push. Maybe this has to do with the FOMC on Wednesday. At least that's the way I'm looking at it. Now, keep in mind, when I'm talking about Tesla, I'm talking about a reversion today. Is it overbought? Yeah. But in the grand scheme of things, it hasn't shown that real reversal pattern yet. Sorry, that's bonds. Seeing if anybody was paying attention. You need to see that kind of bear flag. I mean, keep in mind it was 135. Well, approximately 138. So you need to see those type of patterns for me to do a real swing short. You don't have that yet. Do I think it's going to 170? Yeah, it could go to 170 real easy. But you really need these on the upper left to cooperate. So that's how I'm doing it. And by the way, just to let you know, in the essentials, Allison sticking her neck out, putting in orders, which I really appreciate. Sticking her neck out, and keep in mind, she makes money in calls and puts. So, maybe in that order today. But no, all kidding aside, she's not afraid to play both sides of the market. Not at the same time and then just root for the one that went up. But no, I really appreciate her strategies. So just keep that in mind. Now, here goes your Tesla. So you see what's going on. Now, Allison, am I allowed to mention what you did in the hospital? Talking about dedication. Am I allowed to mention that? So she was putting in orders while she was in labor. Is that okay? I mean, that's that is amazing. So, just really, really got to hand it to you for dedication. And you were right on the trades. So, good job. I just want to tell you that. So, yeah. Well, I just want to tell you, good job in there. So, and that's, like I said, that's dedication. And, that's one thing about Simpler. A lot of dedication, a lot of, she does that great. So, so just keep that in mind. So, getting back to it in here, do I mess with Tesla? Well, Tesla's already gone here. It's already gone to the strike price. So, the big deal now is bond market, Nvidia. That's what I think you watch today. And also, if if Microsoft can't hold that triangle. Yeah, as you say, Microsoft's holding. Now, it's really tough to just go and buy stock versus this, betting on the 410. But just want to show you that. Just want to show you that. So, in there about that's why I didn't mess with Microsoft. And I don't know about messing with Tesla if this is up this much. I mean, you're sort of going against the tide for next week. I still would like to see a reversal pattern. I would like to see something like that. But it is getting in rarefied air, no doubt about it. So I think the biggest thing to watch, I think you see it a mile away. So I always mention my wife when she looks at charts. I'm like, you can see that a mile away. No, I can't. So so sometimes I'm just trying to justify my positions. You see, yeah, NASDAQ sold off, Nvidia went up. So on the other hand, the NASDAQ didn't really rally. So to me, what it looks like is if Nvidia can break, which it's not, then this is more likely to break down. It sure didn't bounce like you would have thought. So you see the QQQ up here. So this how it looks to me. Are you keen off Nvidia on the bottom left, or are you keen off the ZB? And the ZB has dots and dashes. So I use, let's say, a 3-minute. Nah, not really. Well, you see, they're keen more off the direction of the bond market than the direction in the NASDAQ. That's the way I look at it. So, like I said, if the market's up enough, you're just playing Tesla to unchanged. You're not trying to do anything else in Tesla at the moment. If I see a bear flag, fine. But as you see down here, the risk reward wasn't there. It was only 18 cents from the strike price. So you don't play it to the strike. There is a time and a place to play Tesla. It's not now. So at the moment, do I mess with Tesla? There was a time and a place earlier. Little bear flag. It's just not there at the moment. Maybe later, but it's just not there at the moment. If I see this kind of pattern or this, yeah, but this is exactly what we're talking about. It's a better short here than up here because you don't know when it's going to stop. So that's where I am with this stuff, which means at the moment I'm not going to do anything. Now, if I wanted to play it and just short stock, I really think there are two ways to do it. One is to stubbornly short here versus that high, or it's wait till this ATR trailing stop catches up and short it on the way down when it consolidates, which means right now it's not telling you a darn thing. And that's where you are. And in answer to your question about any kind of swing trades, when I see the NASDAQ up against resistance and the ES up against resistance, and I thought I'd throw this out for you. Let me see if I have the chart to share with you. So you got the NASDAQ near resistance, the ES near resistance. And look at the price performance of the S&P since 1950 in May. Yeah, so what? Yeah, like I said, I'm trying to combine things. So now keep in mind, 70% it's been up. But if you combine the resistance, the overbought, and then look for a reversal candle, that's the month to do in an election year. You could do September and October. We're not there yet. But I'm just saying that I would look for reversal patterns here. Doesn't mean now. But over here, I would look for those reversal patterns up at this. Right there. There are two in the S&P. There and here. And because of that, it's hard for me to show you swing longs when we're up near there. And the other thing, and this is just from experience, I can't tell you how many times I've been in stocks like SOUN. And I love the stock. I think it's going to go crazy. And then I stay in it into May and it craps out. Well, May or June. I just can't tell you how many times it craps out in this zone, right in the summer area. So the key is to mess with them in November and December. So that's why I'm having a tough time, whether it's a cheap stock or a strong stock, of chasing them at this time of year. Now, the only one I'm mad in the chart patterns mastery. So I think a number of you were in the essentials. What was the only thing I told you I really wanted to buy this morning? MSOS, the pot ETF. Why? Because it seems to always go up on a Friday expiration. The problem is, and this is the problem with buying options, on the opening, it was here. The 850 calls were 17 cents. Where are they now? 14 cents. So you couldn't do it. So could you have bought GBIF? Yeah, as you see, dots and dashes, it's a little thin for my taste. But if you're going to do it, that would be the way to do it. So just to let you know, I love playing those kind of ideas, but I like playing them with cheap calls, and they weren't cheap. And you're dead right, trader. Trade forever. You're dead right about the markets adjusting. Even though May is pretty bad, that's why this. Let me just show you. You're dead right about your theory, or your idea about markets adjusting to higher rates. And I'll show you exactly what we're talking about. So we're going to take that big old rally back here. And then we're going to underscore the bond market. So what happened? Exactly what you're talking about. Markets went down, but all of a sudden, when rates started to have a positive divergence, this had an excuse to go up. It didn't hurt. It was historically a strong part of the year. But no doubt, the markets had started adjusting. They weren't going down that much. And then you got the bond market that behaved like it's trying now. And so, yeah, the markets are trying to adjust like you're talking about. Now, the big question now is how is probably the statement from the Fed, because everybody factored that the Fed was going to cut. Like I said, I didn't think they would, but there's a big difference between being right and making money. So it's all on right now. A lot of people are bearish according to certain surveys. But to me, it's just you're working off an oversold condition. But I'll tell you, the biggest deal I'm watching. Yeah, there's Apple going to the strike. That had a lot of open interest. Yeah, that not thrilled about that. Nvidia, yeah, it rallied and NQ sort of rallied. I will give you a scenario for the rest of the day that if the bond market goes from up 18, and I agree with you about the bond market if it stabilizes, but that better hold. So it better stabilize, especially with the NASDAQ and the ES at resistance and overbought. So I personally think you're going to have another leg down unless something drastically changes. But I see what you're talking about with the bonds that the market's trying to adjust. The only difference between this time and last time is this time the ES is way up in the upper echelons near new highs, really, while back here it was getting pummeled. That's about the only difference I see. So, yeah, if the bonds have another leg down when this is already made back 50%, then I'll get bearish if the bonds refuse to rally. So that's what I'm watching. And I have to go. I didn't realize the time. Sorry I went over for anyone else, and I will talk to you later. Thanks for listening.